Dilly, how are you?
George, I'm doing really good today. How are
Good.
you?
Okay, I've been better. I hate that song. I hate that song.
Why'd you
I
play it?
Well, because it's got gold in the name of it, and then I realized how much I don't like Neil Young's voice. I was like, that was like an unforced error.
Mm,
God Almighty, it was just horrendous. Anyway, I said I'd been better. I had a pretty scary thing happen to me the other day. So
what
I,
happened?
I went away for a couple days. I went up to Cape Cod. I love it up there. It's where I used to have a house. And I was out on the bike trail up to bike, and it's one of these bike trails in places the pavement's older, and so it's got bumps in it from tree roots. You know the type I'm talking
Yeah.
about. Okay, so they do a pretty good job. Usually they put red paint where the bumps are, and so I'm watching pretty carefully. I'm always looking 20, 30 feet ahead on the ground to see where the bumps are. And I don't know if for women, well, women's probably the same thing, but like if you're a guy and you go over the bumps pretty hard and you have a certain part of your anatomy on the seat, it can get kind of painful. So usually I stand up when I'm about to go over a bump.
Yeah.
So in any event, I wasn't paying attention and I go over this bump, and next thing I know, I go flying.
Oh
And
no.
oh yeah, oh yeah. Fortunately, I have a rather ample rear end, so
Okay.
um, the bulk of the crash impacted my hip slash buttocks, but I also nailed my shoulder pretty good. So I don't know if you ever been like in an accident or gotten stunned. So I'm on the ground. I'm like, I didn't want to move. Like I got my eyes closed. I'm stunned. I don't know what happened. And I called out to my partner Susan, and I was like, did I break something? And fortunately, it did. And then the pain came. The pain comes after a little
Yeah.
while, like you're in shock at first. And the worst part of it was, I'm fine. But the worst part of it was, I kind of like slid a little bit on the pavement, and I got like this enormous like parts of my arm, like the skin is all like scraped off from the
Oh
asphalt.
man.
Yeah, it was not fun. It was not fun. So
Did you
anyway,
bruise
that
your
that was
ass?
my weekend. How was your weekend, Dilly?
Did you bruise your ass?
Actually, you know what? My rear end is actually the least of it. I got so much padding down there; it's not a problem.
Okay.
So, Dilly, do you like to bicycle?
No, but I rollerblade. And when you were telling your story, I fell really bad last summer,
Yeah,
when I was rollerblading. Oh, I was going so fast.
yeah.
But I thought I broke my wrist, but I didn't. So
Oh man. So,
falling is not fun, and especially the older you get.
no, it's not. And I was just thinking to myself, thank God I didn't break anything. Like
Yeah.
as painful as it was, it's like it could have been so much worse. I mean,
Yes.
I'm actually amazed I didn't break anything. It was really something. I have another crazy story to tell you too, but I will wait till later.
Okay.
We're not here to listen to you and I jabber jabber. We're here to listen to Don.
Yes,
Don,
we
good to
are.
see. Don, unmute yourself. Good to see you, Don. Don, you're on mute. Please unmute yourself. If you could hear us, there you go. Hey,
All
There
Don.
we
right.
go.
Yeah, thanks for having me on.
Hey
First
Don,
time.
thanks so much. I know you do regular shows yourself, but this is great. We managed to meet in recent weeks, and I'm thrilled that you're here with us. For those of, I know you've probably got a lot of your fan club here, but for those of us who this is the first time we've heard you, as indicated, I couldn't think of a better title, so I put "Got Gold?" question mark pedal to the metal. So you are knowledgeable about all things gold and gold related, and you've been on a real tear. I read your recent letter you sent me, and no, this is very topical, very timely, and I mean, let's just get into it. So, you've been red hot. What's top of mind for you? What are your I don't know, give us two or three strongly held convictions to kick it off, and we'll just get into questions and dialogue. So, Don, the floor is yours. Please take it away.
Well, I've been waiting for first of all, I like to chase big alpha. I don't care about annual returns. I don't even care about 100% return. I'm chasing big alpha. I want, 300, 500, 1000% returns. So I'm looking for an extended bull market. I don't really care about a 6 month run. I want a 3 year run. And that's kind of what I'm focused on. I'm focused on building a portfolio for that. And I actually think it's kind of a once in a life, this next bull market is kind of a once in a lifetime situation. And so, I'm always in wait mode. While I'm in wait mode, I'm waiting, adding shares. So I can kind of give a kind of a backdrop. So where we're at,
Yeah, yeah,
But
yeah, that'd be helpful. Like, for the layman who doesn't follow the space as closely as you do, they may say, "What's this guy talking about? Gold's been up huge, yada yada yada." But I think I'm more on the same page you're on. So maybe set the stage. Give us context for why you think there's a lot further to go. That'd be helpful.
yeah, so gold broke out. I think it broke out 2019, December of 2019. Gold broke out. We kind of went into a bull market, but it really didn't kick into extra drive, if you will, until last February. No, excuse me, last 2024 in March, April. So I turned bullish gold in April, first week of April in 24. And I basically realized that, basically it's game on for gold. Gold's going to 5,000, nothing's going to stop it. So and it's been that way. I mean, and the reason why is because gold just had this big, huge candle. It just had this breakout candle, and it just never looked back. Never went back and retested those lows. It was kind of crazy what gold's been doing for the last 12 plus months. But silver and the miners haven't really done that same thing, where you just had this feeling that we're not looking back kind of scenario. But now silver's at $39, and it's like it's close. It's knocking on the door, but we haven't seen that one big candle yet for silver to really tell us that we're not looking we're not in that not look back situation. And so there's still opportunity here to buy. Once we get that big silver candle, we're going to be ripping to $45 silver fairly quickly, and all the silver miners are going to double, and people are going to miss out, and we're going to be off to the races. The HUI was in this. I call it the channel from hell. It went into this channel in 2013. So gold started dropping in 2012, and it didn't completely crash in 2012, but then in 2013 it did, and the HUI went down sub 365. That was like the top of the channel, and then it went all the way down to 150, and it stayed in that channel for 10 years. It was really, really brutal, and we just broke out of it above 365, and we're sitting at 450. And you would think, well, Don, we're at 450. We've definitely broken out here. But it doesn't feel like it. I mean, we got above 365, but it's kind of we're kind of like climbing this wall of worry. And so I think we're going to go back and maybe go back in that channel one more time. If we don't go back in the channel, I think we're going to come close. I think we're going to retrace back. But I'm always people always call me the most bearish bull. And the reason why is because I'm always looking, at kind of what's coming in the near term, and I always see kind of red flags. And so right now I see a lot of red flags for a correction. And the one thing that we need for the gold and silver miners to do well is you need the stock market to basically do poorly. The only time the miners have done well is the 1970s. And what happened in the 1970s? We had two energy crises. We had two recessions, and a severe one at the end of the 70s. Then we did nothing from 1980 to 2000. The miners did nothing. I mean, literally nothing for 20 years. And the reason why is because Reagan got into office in 80, and then we basically had this economic, period for 20 years where we did really well. We had a real mild recession in 91, 92. But basically 20 years of really strong economic growth. The miners did squat. Then 2000s, we had three crises. We had the dot-com bubble pop in 2000. We had 9/11 in 2001. Then we had the great financial crisis in 2007. We had three crises. Now, 2009 till today, we haven't had a single crisis. We had two little blips, but they lasted 2 weeks. We haven't had a serious crisis. We had, one correction that lasted a month. So the worst thing we've had is a 4-week correction in the stock market. But basically, we've been on a 15-year roll. So what we need is we need the stock market to stop going up, and that'll be the key for the miners to basically finally get into this bull run. And I think the key is going to be the stock market basically going down, getting a big serious correction, and the fear trade to kick in. Some people think it's not going to happen anytime soon. I think it could happen at any moment. August 1st, Trump is going to release his tariffs. I think it's going to be, kind of a tariff tantrum number two. I think the next 3 months are basically a gauntlet for the stock market, and I don't think we're going to get through it. So that's my intro.
Great. So the charts, yeah, we can see the charts, and I see what you're looking at. everyone has their own reason as to why they think, gold and precious metals will do well. Do you have your own specific reasons? Like, in other words, put the why behind it as opposed to just the what. Like, why do you think gold's going to go up so much?
Yeah, many reasons. So I'm 65 years old, and so I've been following these markets since say 1980. So I turned 20 in 1980. So I followed the Reagan era very closely, and everything since then. So mid 1980s, I remember telling my dad, I said, "What Reagan's doing here is dangerous because we were growing at 3-4%." And Reagan was having these $250 billion deficits, and he basically increased the debt. When Reagan got into office, the national debt was under $1 trillion. He left; it was 2.7, and he basically implemented Keynesian economics during times of growth. I became nervous of the future of America's economics on what we were doing. So basically, the U.S. historically, the U.S. was a mercantilistic economy from 1945 to 1970, very successful. Low inflation, um, very strong cost of living. I mean, people were wealth was going up, your standard of living was going up. We were basically the envy of the world from 1945 to 1970. Then it all ended. It all stopped in the 1970s. Our mercantilism ended. Where mercantilism is kind of what China and Japan do, and South Korea. It's when you make money by making stuff. You're generating wealth, and it worked. And then in the 1970s, we had to pivot. It's like, oh, what? And that was the period of the malaise. It's like, okay, what do we do next? We can no longer be this dominant mercantilist economy. So we pivoted into globalism, Reagan in the 1980s, and that was dangerous. And to this day, mainstream economists and Wall Street they're just like, it's okay, we can do this, everything's fine. But if you're paying attention, you're seeing the slow degradation of the middle class. The middle class is slowly getting rug pulled, where their standard of living is actually going down instead of up. And then if you graduate from college today, it's really difficult to basically get married and start a family in your 20s. It's just too expensive, and versus your incomes, everything is kind of broken because we went to globalism. So globalism is failing, and globalism has reached a point where the United States is literally bankrupt. And I think we're in a doom loop here where there's no way out. So Trump is using tariffs through desperation. He's basically saying our bond market is literally dying here, where we can no longer, because foreigners aren't buying our debt, we have to borrow 100 to 200 billion dollars every single month. Who's going to buy it? And the percentage of foreigners has been shrinking dramatically if you go back 10 years. So foreigners are basically staying away from our bond market, and we have to fund it internally. Well, guess what? There's not enough money internally to fund it. So we're gonna reach a point where we fail. This is the doom loop. We cannot afford these $2 trillion deficits. And Trump brought in the Doge. He said, "Okay, Elon, save me as much money as you can." And then he basically is doing the tariffs. He's trying to raise $300 billion this year. It's not enough. We have a $2 trillion deficit. $300 billion in tariffs is not going to do the trick. And then on top of it, the U.S. economy has been weakened through globalism, and by being weakened now, the economy since 2008. We basically have adopted MMT, where we basically manipulate the Fed and the Treasury, basically manipulate the economy with low interest rates and infusion of money to kind of keep it alive, if you will. We would be in a deficit right now. We would be in a recession right now if we didn't have a $2 trillion deficit. It's a Potemkin economy. It's fake.
Right.
We have a
So,
fake economy.
yeah. So basically, it sounds like we're kind of on the same page. It's going to keep printing a lot more money to kind of sustain this whole thing. And so, staying with that, Don, I'm just looking here. I mean, you've got some um, pretty ambitious targets here. I notice here, if I correctly, you think that once the Huey breaks out, you think what is it, fourth fifth or something like that? You think over 2 or 3 years you can go to 1,500? Do I read that correctly?
Easily, yes, easily. And the reason why is because the gold. You're not going to stop gold. So the Hui basically coincides with gold. And so, yeah, I think we'll basically double. We're at 450 right now. We'll double to 800 basically a snap of the fingers. So
Right.
so you'll be at 800 when gold's like 3,600, something like that. I mean, it won't take long, maybe 3,700, 3,800, somewhere in there. But the miners are just they're gonna make an initial big burst,
Right.
and so you're gonna get to 800 fairly quickly, and then you got a whole $1,000 of gold to get to 5,000. And that'll take you up. It'll double again from 800 to 1,600. So yeah, 1,500, 1,600, definitely in our wheelhouse. It's definitely coming. I mean, I do the numbers on. I mean, that's how I got involved in this. I started doing this in 2004, and I started analyzing these companies. And the only thing that made sense to me is you have to do this from a long-term perspective. You don't buy a gold miner for 12 months. People like to do it because that's how they think. They think I'm going to invest annually. I want annual returns. I want to make 20% this year. I want to make 30% this year, and then I want to compound it. That's how everybody thinks. The problem is that mining stocks are speculation. You don't speculate to make annual returns. You invest to make annual returns. This is speculating, and you want to speculate out 2, 3, 4, 5 years. That's how you make your 10 baggers. And so what I did was, okay, Don, I want to make big alpha. How do I do it? And so I basically said, okay, I need a target price. So what is my target price for gold and silver? I throw my target price out there. For instance, I mean, if we use a company, who do I want to use as an example? I guess I could. I want to use. Thinking who's the easiest one. I guess I could use a Vino Silver, because that one's clear in my mind. Okay,
Okay.
so Avino today they're only producing 2.5 million ounces of silver, and they're gonna end up year in about 3.5 million ounces of silver. I don't care. I don't care. It's irrelevant to me. What's relevant to me is what they're going to produce in 3 years. So in three
Right.
years, they're going to be producing 8 million ounces, 3 to 4 years. At 8 million ounces, so you take that 8 million and you multiply it by the silver price. I have a target price, $100 silver. So $100 silver, to get $100 silver, you do is take $5,000 gold, which I think is a slam dunk, and you
Right.
divide it by 50, and you get 100. I think a 50
Right.
GSR. So that's where the 100 comes from. It comes off of. It has nothing to do with silver. It has everything to do with gold. So silver becomes a proxy to gold. You're going to get a GSR squeeze. So anybody that thinks that $100 silver is high, they're just not paying attention to history. So $100 silver, okay, so that's the number I'm going to use. Then I'm going to take that, and I'm going to estimate the cost out in the future. So I'm going to use $35. I could use 40 to be conservative, but I'll use 35. Comes out to $500 million annual free cash flow. Then I'm going to put a
Right.
multiple on that, which is 20. I'm going to use 20. The reason I'm going to use 20 is because the margins are going to be so huge at $100 silver. If they have huge margins, you're gonna have a huge free cash flow multiple. So I'm going to use 20. That takes it to $10 billion. Their current market cap is 550 million. So if you compare 10 billion to 550 million, you get a 17 bagger. So that's how I invest. Very
Right.
simple. I project out into the future, and I say, okay, how much are they going to produce? How much is it going to cost them? And then how much free cash flow are they going to get? And I just say, okay, that's my target, 17 bagger. Now, it's not going to be a 17 bagger. It might be a 13 bagger. It might be a 25 bagger, depending. Silver prices could go higher. Their multiple could be higher. But it's basically a target. And again, you're never going to hit your target. But what you're trying to do is get close. And so if it's like it
Right.
says 17 bagger, hell, I'll be really happy if it's a 10 bagger. Now the
Right.
problem with Vivino is they're so darn cheap. The odds are someone's going to take them out. 80% of their shares are retail. So Heckle today could go say, okay, we want to buy you and we're going to pay a 30% premium. I guarantee you it would pass. Heckle could buy Avino today for a 30% premium, easy peasy. But they don't do it because they don't think that silver is going to $100. If they thought it was going to 100, they would have bought it already. I mean,
Right.
and so that's pretty in a nutshell, kind of how I
So
analyze and buy my
so
stocks.
so that makes a lot of sense. You take a stock like Avino, where they're not just geared to the rising silver price, but it sounds like you got a big growth and production number in there. You mentioned they're going from 1.5 million to 8 million or whatever the numbers
Yeah,
were,
Tate.
as opposed to like a large cap guy where Yeah, they got the leverage to the gold or the rise in silver price, but there isn't that much growth in production. So you tend to find like some. I was looking through your screens and what you like the most. I mean, a lot of these tend to be more medium and smaller cap names, just because they got much bigger growth in production. Is that
The
correct or
yeah, the
incorrect?
my favorite investment by far is to find a producer that's undervalued and is going to grow production. That is the best investment you can make. It's the best risk reward. That's why Avino is so beautiful, because they have 330 million ounces of silver equivalent, 330, and they're only mining 2.5 million ounces.
Wow.
So that's why they're going to get to 8. And the beautiful thing about them getting to 8, they're actually going to get to 9, because they also have a tailings project, but I'm only valuing them at 8. But they will get to 9. They might get to 10. And their capex is tiny. So they're very conservative. They could grow a lot faster if they wanted to, but they're only going to they're going to add 1 million ounces a year, and they're only going to spend $10 million a year in capex to do it, which is
Mm-hmm.
crazy cheap. I'll give you an example of how crazy cheap it is Spanish Mountain just did a PEA. Their capex is $920 million to produce 200,000 ounces a year. Now that's crazy high. That's
Wow.
crazy high, but it just gives you an idea. So Avino's spending 10 million to add
Right.
a million ounces a year. So yeah,
But
it's a beautiful setup.
hey, Don, what's the in the case of Avino, what are we talking market cap wise? What was it, like 500 million? Yeah, you said 550.
550,
550.
550.
Okay.
Yeah,
Okay.
going to
Okay.
10 billion.
I got it. And by where is Avino? Where are most of their resources?
They only have one mine. It's in Mexico,
Uh
and
huh.
then they're adding a second mine, also in Mexico. That's I think 10 miles away, maybe 15 miles away. They're trucking it in,
Right. And are
trucking
you?
the yeah,
I'm more of a tourist in this sector, but I remember from years past, when I used to speak to a lot of gold analysts, there's always big emphasis on the location, the jurisdiction of where the properties are, because some
yeah.
places you don't have rule of law, whatever. So you talk a little bit about, whether the properties in Mexico, Canada, the U.S., Africa, whatever. Like, does it matter to you where the mine is? Because some places aren't as safe as others.
Yeah. So yeah, Mexico is probably going to bite us in the long run. That country is steadily becoming less and less mining friendly. The last president, AMLO, he was anti-mining. He did not approve an open pit in 6 years. He basically created his own law. He was supposed to go through Congress to do that. He wasn't supposed to basically be able to, freeze out everybody. But he kind of it was. I called it a shadow ban, and we could, the new Sheinbaum's the new Mexican president. She might have a shadow ban in place. We don't know. I don't think she does. But until they approve another open pit permit in Mexico, we won't know for sure. But Mexico, I'm overweight Mexico. It makes me nervous because, again, the country is steadily becoming less mining
Right.
friendly. I think what's going to happen in Mexico is they're going to raise royalty rates, they're going to raise taxes, because once silver prices get above $50, Mexico's, if not, they're in the top 3 mining countries in the world, silver mining countries in the world, and they will definitely increase their royalties on silver miners. I just think it's inevitable. And so that's going to happen, and so that's going to lower our returns. So yeah, any emerging market countries basically, high risk. The reason why is because emerging markets, they want to protect, their natural resources. They're emerging because they're not high,
Sure.
they don't have a high standard of living, and they need as much money as they can to grow the country. So
Right.
any place in South America, Central America, and Africa are high risk, and that's just the way it goes. Some are more risky than others, and so you have to kind of pick your spot. Some people will avoid Africa all the way. I'm overweight West Africa. I know it's going to bite me, but I'm just hoping that they don't crack down. I think what's going to happen is there's going to be one country that I don't know, raises the royalties to the moon, and I'll just get angry and just sell all my African stock. I think that's going to happen.
Yep.
But one thing I've been pushing, but people won't do it, is Aussie. I think that the Australian gold miners are just going to have huge margins because people are going to have a flight to safety. they're like, oh, those Aussie stocks, man, those are safe. I'm gonna buy those,
All right.
and
So
they're all cheap right now.
right. So maybe run through it. And by the way, again, this is not financial advice. Everyone has to do their own work, especially some of these caps are not the biggest and might not be the most liquid. So, you know, don't blame Don if it goes the wrong way. Just like don't give Don all the credit if it makes money for it. Everyone's got to put on their big boy pants. So Don, do you want to mention an Australian name maybe just to give people an idea what you're talking about?
Yeah, I will. And I always say this: do not invest in mining stocks unless you want to lose money. Mining stocks are speculation. You're going to go underwater. You're going to lose money. That's just the nature of the thing. I mean, people buy mining stocks and think they're going to make money. It's not how it works. It's hard. One thing people are lucky is I think we're heading to a bull market. So, like the last year, the last 12 months, it's been easy to make money in some of these silver miners. They've been doing great. A lot of people are up 50, 100% over the last year. That's not normal in this space. This space is hard. It's difficult. You're gonna lose money. The one thing I say is you're speculating. Don't expect to make money. Yeah, speculation is high risk. All right, so we're going to talk a little bit about Australia. So I absolutely love the Aussie mid tiers. So I created a list called the first created a list in the silver space called the Mormons. I created it in November of 23, and they're up over
Wait,
150%.
Don, why are they the Mormons? Where'd that name come from?
Yeah, so I was going to explain that. So
Sorry.
my friend he loved to buy these high risk stocks, and they were ugly. I said, quit buying all the ugly stocks and start buying the pretty stocks. I said, you need to buy the pretty girls. And I started listing them, and I said, First Majestic, Heckler, Coeur, Pan American, and Everson. You need to buy the quality miners. Quit buying all these ugly stocks. So he told his wife, he goes, I'm going to buy the Mormons. And the reason what he meant was, I told him that he was marrying all the ugly stocks. And I said, you need to marry all the pretty girls. So he told his wife, he goes, I'm buying the Mormons. He said, my friend named them the Mormons because he's going to marry all these pretty stocks. And so I created this list of the eight best silver names. And I just did a Seeking Alpha article that has 10 names, and eight of them are the eight Mormons. And so, and then after that, I created a list in Australia called the Aussie Eight. So we're going to talk about those. So the first one is Greatland Gold, which I have a crush on. Greatland Gold has just these two beautiful mines. One is Telfer. They're just generating a ton of free cash flow. I don't know if they're going to try to extend the life. But the next one is Havieron. They bought this from Newmont because Newmont got it from Newcrest. They acquired Newcrest, and then it was owned by Newcrest, and then Newmont didn't want it. It's unbelievable they gave it to Greatland. But Havieron is unbelievable. It's 400,000 ounces to start with cash cost around $400, and it's a 20-year mine. It's just very, very low cost, long life mine. It's like it's just a beautiful mine. Like I said, I have a crush on her. But that's the thing that's beautiful about all these stocks in Australia is basically out in the outback. Is like nobody lives there. It's just basically a big mine. Western Australia is just one huge mining district, and they've been mining it for decades. They have tons of experience. They're like farmers in the U.S. They're like generational. I mean, they know what they're doing. They're pros. I love that. So they're basically experts at mining. A lot of them understand that mining is a cash business. A lot of them have no debt on their balance sheet with a lot of cash. I love that. Like, hey, Greatland's got 300 million in cash, no debt. West Gold, is another one, 300 million. I know maybe not that much, 150 million cash. Ramelius, another one, ton of cash, no debt. Capricorn again, ton of cash, no debt. So they basically and they're all generating a lot of free cash flow. The only one that's kind of having trouble is Bellevue. They're having a grade problem right now, but Bellevue might have the best exploration of all of them. Keep waiting for somebody to take Bellevue out because it's gotten so cheap. Um, who am I missing?
Yeah. So Don, just look. Yeah.
Regis. I didn't mention Regis. Regis is another one that's high quality. They
Right.
basically these are very high quality mid tier producers. They have a market cap from 1 billion to 3 billion.
Right.
They're all going to become majors. There's only two other companies that are two large miners in Australia. You have Evolution Mining and Northern Star. Those are the two majors. And then you have all of these mid tiers underneath it, and
Right.
there's a couple more that are. But man, there's so many miners. I have how many? Like 200. I have 200 Aussie miners
Wow.
in my database out of 850 companies. There's a lot of Aussie miners. There's
Right.
and so yeah, so love the Aussies. There's lots of
Right. Yeah.
opportunities over
Yes.
there.
I'm just looking here at the numbers. Some of the names you mentioned, they're all, like you said, between 1 and 3 billion. So they're plenty big enough for individual investors to buy. Maybe not so much for
Yeah.
institutions. Hey, Don, let's get back to a bigger. By the way, if anyone has a question or wants to join the conversation, please raise your hand. We'll try to make this more interactive and bring other folks into the conversation. So, Don, mining stocks generally, I mean, they like way underperform gold for a very long period of time, and this year they started to act better. Why? And people talk about the costs and poor allocation of capital and so on and so forth. But in your view, why are the mining stocks so badly underperformed the metal itself? Looking back the last few years,
Well, since 2012, the sentiment has basically been in the toilet, and it's just starting to improve, but it hasn't gotten there yet. Wall Street doesn't care about the miners yet. But I think even with huge margins, but the reason why sentiment went in the toilet from 2013 until now is the margins were just pathetic. They're just, that's what drives free cash flow. So if you don't have the margins, you don't have the free cash flow, and you can't push up the multiples. So it's like dead. And, so the whole that sentiment is dead, and nobody wants to own them. And if nobody wants to own them, nobody's pushing these stocks higher. So the multiples are going to be basically depressed. And so right now the multiples. Last time I looked on the producer multiples, that was right averaging around a 7, and it should be easily double digits. So it's basically all the miners are like, even with these huge margins. So the average margin right now for gold. So we got gold at 3,300, and we have the average ASIC around 1,600. So we have margins around 1,200, depending on the company, to 1,600. So we have these. Anytime you get $1,000 margin, that's really good. And so we've had margins below 500. The average was below 500, which is ugly. So you want the margin to be at least 30%. And ideally, it's great when you have margins at 50%. So basically, if you take 3,300 and you do 30%, it's $1,100 margin. That's really healthy.
right?
And ideally, we'd like to have $1,500 margins. Some have actually do today. So that would be 1,650. So 1,650, we have companies out there right now. A lot of these Aussie companies like 1,650. I know Capricorn is 1,650 or higher. So any of these companies that have low ASICs are going to have these massive margins right now. We didn't have that. That all happened in the last 12 months when you had
Got it.
gold basically rip over $1,000. That $1,000 rip in gold, that all went. A lot of that went to the bottom line, and so yeah, so it's all about margins. And so now, like I said, you want 30% margin. That makes it healthy. Well, guess what? Silver producers, they've been just absolutely obliterated because their margins were so poor. I mean, we had silver under $30, and we had the average ASIC about 22. I mean, these companies were making less than 10% margins. It was absolutely pathetic. But guess what? At 39, now we have 30% margins in silver. But the irony is that, okay, I always thought that when silver got to 39 and we got 30% margins, that the silver miners would blast off. They haven't. I mean, look at Hecla. It's at 630. It should be double digits. First Majestic's $8. It should be double digits. Pan American's done a little bit better. I think it's around $9, but even it's underperforming. So the silver miners really are lagging. Now that's the canary. I'm always, I've been doing this for a long time, 20 years. I always look for, okay, why aren't these miners doing better than they are? Why is, Newmont was at $82 in 22, and today's like, I think 62. It's like 25% below where it should be. And why? And so basically, my point is that we don't have a bull market yet. in the miners. I mentioned the HUI at 450. You're thinking, wait a minute, Don, we're at 450. We're breaking out here. I think we're not yet breaking out. We're close. We're very, very close. Tabby Costa posted a Hecla chart, and he showed Hecla hasn't broken out yet. And
Right.
Hecla is probably the number one kind of signal for silver miners, because Hecla is the only large silver miners in North, that only
So,
mines
Don,
in North
so yeah,
America.
so Don, let me ask you: the reason these stocks and mining stocks, I want you to jump in with a question in a minute, Don. The reason these stocks have done poorly, is it neglect, or is there a bear case, or people don't believe that the higher metals prices are sustainable? Like, is there a bear case, or is it just neglect?
Well, it's a few reasons. It's never one, of course, but the main one is Wall Street. So Wall Street, I mean, you think about how much money is on Wall Street, right? We got $50 trillion in the market, and the miners make up a tiny, tiny, tiny percent of that. So no
Right.
money, so money isn't flowing
Because they're not.
from.
Yeah, they're not in the indices. I get it. I got in the
Well,
indices. Yeah.
they don't need to be in the indices to
Sure.
flow. They don't need to. They just need to basically someone to think they're worth
Sure.
investing into. And so the reason, so basically the miners, the sentiment went in the toilet, and there hasn't been a trigger. There hasn't been a trigger that says, okay, I want to buy the miners. Now, Wall Street is never trained on mining stocks. You know, mining stocks are a weird animal. First of all, mining stocks do not have customers. They have buyers. They do not have competitors. Hecla and Coeur mining do not compete against each other. They do not. They do not compete. They're not competitors. What they both sell their stuff to the same people. They have buyers. That's it. And
Right.
the thing that's beautiful about the mining industry is if you dig it out of the ground, someone will buy it. So it's easy peasy to sell. The hard part's getting out of the ground. But it's a weird industry. Like I said, it's the valuation is all driven by what they sell, the commodity. So the gold and silver price literally direct dictate
Sure.
how the valuation. Whereas a company like Microsoft or somebody else, they actually compete based on their customers. They compete against other competitors.
Great.
You know, it's and so mining companies don't have competitors.
Got it.
So all they need is a high gold price. But okay, so we have this high margin now, right? And the miners should be ripping, they should be taking off. But there's no eyeballs on these things. Like, so what? I mean, Newmont has, you know, they're generating $6 billion in free cash flow. You know, basically $1,000 margin, 6 million ounces a year. So the run rate is like 6 billion, 1.5 billion in free cash flow, and they're only getting like a 9 multiple. They should be getting like a 12, 13, 14.
Right.
And the
Okay.
reason why their multiple is low is because Wall Street's like, I don't want to own those stocks. Now, one final point: why doesn't they want to own it? They're not trained in mining stocks. They're trained in reading a balance sheet. You don't really read a balance sheet, and it's not easy to understand these miners. These guys on Wall Street are not trained. They're not taught how to analyze mining stocks, so they don't care about them. The only time they care about them is when they're not making money. So if you go back to the last time from 2000 to 2011, they're having a hard time making money. If you look at the S&P 500 of where it was in 2000 and then where it was throughout the decade, the S&P 500 was basically flat the whole decade. Nobody's making money. So what they did was, if you want your bonus, you got to look around and say, okay, I can't make any money like, in industrials, or consumer goods. I got to find somewhere where I can make some money. So they look around, they go, what's making money? Well, the miners are making money. Oh, and they start buying them. So they only buy the miners when they have to. And
Got
right
it.
now they don't have to because they're
Got it.
making money on Wall Street.
Got it. All right. Let's hold it right there, Don. Take a deep breath. Mr. or Mrs. Mining Stocks, are you there at Mining Stocks? You got your hand up, so you're a speaker. Hello? Don, do you know this fellow Mining Stocks? Is he one of your friends?
He follows me, yeah.
Yeah, he's up as a speaker. I don't know if he can. He's got to unmute himself, or maybe he's not
Yeah.
there, or whatever.
Yeah, you're muted, Mining Stocks.
I don't know if he's muted or maybe he's just.
No, he's muted. I can see it on my phone.
Yeah, yeah. No, I think he's muted. Maybe he's having lunch or something. I don't know. Whatever.
Yeah.
All right. So Don, could you talk a little bit about maybe just? I mean, these are probably the least interesting stocks for you because you don't have them as your favorites, but they're the heavyweights that represent the bulk of the commonly followed ETFs, the GDX. So like Newmont and Barrick and these sorts of things. How would you characterize these stocks? They have upside, just not as much upside as the ones you like, or you think they got problems, or what would you say
No.
that people know Newmont, they know Barrick. What would you say about these companies, these stocks?
Yeah, yeah. I think Wall Street is asleep at the wheel. It's unbelievable. I mean, for instance, I mean, if you look at like the Mag 7, which everybody's in love with,
Yep.
those stocks are not going to be 300, 400% returns over the next 3 years. They're not going to be 100% annual returns over the next 3 years. Guess what? Newmont and Barrick are, but they're not paying attention. The reason why Newmont and Barrick are both going to be 3 or 4 baggers over the next 3 years is because gold's going to go to $5,000, and they don't believe it. They don't see it. They're blind. But that's exactly what's going to happen. But if they knew that, if they did their analysis, they analyze all this stuff. If they knew kind of what I know, and people that are watching and listening to this, if they recognize that all gold is going to do is go higher. Newmont and Barrick, we're in early innings of a bull market. They're both undervalued bigly. It's unbelievable how cheap
Right.
these stocks are. I mean, a 10 multiple is just crazy with these kind of margins. And they're both trading under 10 multiples. So you're
Got it.
buying these stocks at half off, and the multiples are going to expand dramatically. I actually think that Barrick and Newmont are going to go to a 30 multiple. So you're going to get 200% expansion just on multiple expansion alone. So you could say that you're
You're
buying the
buying this.
stock 30% of what you're basically buying them 2/3 off. So they're asleep at the wheel. Now I created another list called the Elite Eight. So now I own these stocks in mutual funds and some of them in ETFs, but I don't buy the majors unless they're really cheap, like if they're a 5 bagger. Like I bought Northern Star recently because it prints as a 7 bagger, which is kind of crazy. Pan American prints as a 9 bagger. It's a major. But these stocks, 3 and 4 baggers, I kind of pass on them because I own them in mutual funds. But if you're rich, anybody that's rich should basically have $100,000 in these Elite Eight, and I'll mention them. If you own the Elite Eight and you have like 100 grand in each one, you're going to start off with about a 2% dividend. Then every time it doubles, your dividend's going to double. So you're going to go to 4% dividend, then you're going to go to an 8% dividend, which is pretty darn good, right?
Sure.
So
So
if
what? So
you're
yeah.
basically
So
counting, you're basically, and so this is
so
for rich people. For us, everybody else, I mean, we want to go. There's more. The
sure.
fish in the sea have much bigger alpha. You want
I
me to list this
you
Elite
know
Eight?
yeah, Don, I get it, but like big money, like when mutual funds and institutions move in,
Yeah,
like they can't buy a lot of the small, so they're going to buy these big cap names, and I get it.
yeah,
These
yeah.
aren't nearly as attractive as the ones that you like, but these are still going to do well in an absolute sense, is what you're saying, if I understand you correctly.
Yeah, they're for instance, GDX, which is the ETF, that GDX is probably going to go up 80%, average 80% a year, maybe better over the next 3 years is my expectation, which is unbelievably good.
Yeah,
Okay, so but the stock, yeah. So I mentioned Barrick and Newmont. The other one is Alamos and Agnico Eagle.
sure.
So
Yep.
so those are kind of the big four.
Yep.
Those stocks are gonna be bought bigly by all by Wall Street, and they're gonna do well. But Alamos and Agnico are probably only going to be 3 baggers, and then
Okay.
Barrick and Newmont are probably be 4 baggers, which is really, I mean, that's pretty darn good
Yeah,
returns.
yeah. Don, I applaud your enthusiasm, and I just have to let you know, the Dilly, who's right next to you in the app, she's been correctly very bullish on Bitcoin, and I don't think I've heard anyone speak as positively on stocks or group as you have. I mean, you're actually talking much more optimistically than the Bitcoin people. And so I know it's not your lane, Don, but I have to ask you, I'm sure you've been asked before. One of the narratives going around is some people say, well, just one of the many reasons. You may say it's full of crap, it's not full of crap. I just want to bounce it off you. You know where this is going. That some of the money which otherwise would have gone to precious metal stocks or to gold instead has gone to Bitcoin. And some people say gold is, Bitcoin's digital gold, blah 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 blah. So you may just beg off and don't want to answer the question, but do you have any sympathy for that view? Do you have an opinion on Bitcoin, or it's just not something you follow?
Yeah, everybody's cringing. Everybody that's watching is cringing. So the reason why they're cringing is because I'm a Bitcoin fan, and most of my followers aren't. I write about Bitcoin all the time. I wrote a 100-page paper on Bitcoin. I got into Bitcoin when it was at $400. I
All
got
right,
in
so
early.
Don, hold
Got
on,
it
hold
early.
on, hold on, hold on. You got to be Dilly. You got to weigh in here because Don's your guy, not mine. Now he's coming out of the closet. Dilly, he really likes
I don't.
Bitcoin.
I write about Bitcoin all the time on X, and my followers just jump all over me. So let me explain Bitcoin for people. And I'm as bullish now as when I did my first deep dive. So I have an IT background. I worked in IT for 20 years, and so
Dilly,
no.
why
Let
don't
me
you?
let me
No, no, Don. I
yeah.
want to make a joke here. Dilly, why don't you warn me about this guy? He's like a wolf
I
in sheep's.
didn't know.
You didn't know.
Okay,
Now
all
I
right.
he's
didn't
coming out of
even
the
know
closet.
that.
All right, Don, go ahead.
Let me explain. Okay, so I have an IT background. I actually started out as a computer programmer. So when Bitcoin came on the scenes, 2010, 2012, I basically ignored it and said, you can't make private money. That's all BS. I mean, totally ignored it. Then in 2016, it went to $1,000. And I said, what the hell? And I said, and then it crashed all the way back to 100. And I said, it's going to zero. There's no way. And then it started trending back, right? It got to 250, 300, 400. So I looked at it. I thought, so it finally got my attention in 2016 at $400. And I did a deep dive on it, and it blew my mind. I couldn't believe how elegant it was. Very elegantly written. I mean, the fact that it's basically anti-fragile blew my mind.
Yeah.
The way that it's coded. The other thing, I spent 8 hours just understanding how it does a transaction, how it basically prevents the double spend. I was like impressed. I mean, I was like, Jesus, this stuff is amazing. So I was a computer programmer, so I was totally impressed by how this thing was coded. It was very impressive. And then I'm like, okay, I'm impressed with the software. The software is pretty damn cool. And then I thought, okay, how does this thing die? And I tried to figure it out. How is this thing going to die? And I couldn't figure it out. I'm like, how do they turn this thing off? How do they prevent it? Because remember when that guy came out with the music sharing, right? The government shut that thing down like remember the music sharing, how they killed that thing really quickly. And I'm like, okay, they're going to kill it. The government will kill it, right? But no, that was in 2016, and I'm like, I couldn't figure out how to kill it, right? So then the third thing, the reason why I bought it immediately and turned bullish and been bullish ever since, was the halving. So the halving basically puts an underlying upward pressure on the value, which makes it basically makes it more rare, because every 4 years the supply gets cut in half. So it basically just puts this underlying upward pressure.
Exactly.
I'm like, whoa, this is bizarre. Okay, so I've been following it closely ever since. So when I had my website back then in 20, I did this in 2016, and so I opened my website in 2012. So I used to post in my forum telling people to buy Bitcoin. Nobody bought it. I was like, one guy bought it and then he sold it. I mean, but back then I only had about 200 subscribers, but nobody cared about Bitcoin in 2016. Nobody would get involved. And I just kept telling people, do this. I remember writing an article for Seeking Alpha saying when Bitcoin was at 10,000, said the best investments is Bitcoin and Ethereum. This was when Bitcoin was at 10,000. Ethereum was like 250 or something. They wouldn't post it. They wouldn't print it. They turned it down.
Really?
Okay,
Wow.
so now my thesis, and most maxis disagree with me. My thesis for Bitcoin right now is that we're in stage two. I came up with these ideas with 3 stages. So stage one was retail adoption, and that was from zero, or say $100 to 50,000. That's the initial surge. It's all retail. It's all punk rock. It's all done behind the scenes. Then once you get to 50,000, that's when the institutions come in. And I think the institutions, this is phase two adoption, which I think will occur from 50,000 to 500,000. Once you get to 500,000, I think you get saturation. And once you get saturation, at that point, from 100 to 500,000, the only investment for Bitcoin is the Ponzi scheme thing, where everybody's just doing it to make money. And that's why I got in. I'm basically saying the number goes up. It has to go up. So I got in, and that's what it's done. But once Bitcoin gets to saturation, I believe that's going to be phase three. And that's the unknown. We don't know what's going to happen when we get to saturation point? Most people think, it's like the sailor thinks that phase 2 is going to go forever, and just more the hodling thing is just going to go forever. I don't. I think you're going to get to saturation point, and then Bitcoin has to prove itself. And how it has to prove itself is through utility. It has to be used. And I think that what's going to happen is going to be used through collateral. I think it's the perfect collateral because Bitcoin can be priced 24/7 and it's highly liquid. So it's the perfect collateral. So I think once we get to 500,000, I think that's when Bitcoin becomes collateral. And if it becomes collateral in a big way, I think Bitcoin goes to 1 million. So my target is 1 million. But I haven't bought any alts since Bitcoin was like at $1,000. I mean Bitcoin. So I stopped buying Bitcoin at 1,000. I started buying alts, and
So
the reason why is because Bitcoin. The only way Bitcoin goes up is if demand is bigger than supply. I don't like that thesis, but the blockchain, it can grow because all it is software. That's what I love about blockchain. So I like Ethereum. Ethereum is just a platform. It's just a platform that you build on. So Ethereum can just keep getting bigger and bigger and bigger. It's like Microsoft, just grow, grow, grow. So Ethereum can last 10, 20 years, whereas Bitcoin, it can hit a ceiling. So I prefer the alts to Bitcoin. So I'll end it there.
So Dilly, this for a guy who, he advertises as the gold guy. This is kind of This is Dilly. You give him pretty good marks. I mean, he certainly
No, he
doesn't have to
definitely
talk to.
understands Bitcoin and why it's valuable. Um, how did that sit with you, George?
Pushing my buttons, Dilly. There you go.
Yeah,
Hey,
it's good to hear somebody understands the scarcity and the benefit
yeah,
of the having, and yeah, I like it.
yeah. No, that's good stuff. That's good stuff.
Mhm.
So Don, you're you've been doing this for a while, and like you said, you think it's a once in a lifetime bull market we're looking at. So for the whatever 20, 30 years you've been doing this, is this about as bullish as you've ever been on the gold stocks?
Yeah, absolutely. Since April of 24, when gold
Right.
basically broke out, I became uber bullish that this is it. This is run. But one thing about this market, the one thing about me is I always throw the host for a loop, if you will. We start talking about gold and we went to Bitcoin. Now we're gonna pivot again. So the reason why I'm uber bullish is because I'm uber bearish the U.S. like America. Now I love America. I'm very depressed of the state of affairs in America, but I've seen this coming. I've been writing about this since the 1990s. So America is basically toast. We don't have a path forward. I wrote a book called The Path Forward explaining why America doesn't have a path forward. And it's becoming more and more obvious. I mean, if you look at the splitting apart of America politically, the splitting apart, that splitting is not going back together. It's getting wider and wider and wider, right? The blue states and the red states. And I saw that coming. Like I said, I've been writing about it since the 1990s. So America doesn't have a path forward, which is not good. I'm not happy about it. So basically what's going to happen is, America, I mean, we've lived through an amazing era, this expansion of technology, materialism to the hilt. That's all coming to an end. Our America is getting ready to transition into kind of a new era, if you will, and it's not going to be fun because America is going to break out into regions, and this is the reason why gold's going to the moon, because once it's financial, the last shoe to drop is our financial system. So when our financial system starts to break down, then there's no way back. There's no way back. That's the only thing that's holding America together right now. America's like a big corporation, and so once that falters, then it's basically, it's kind of game over for America. Most people doubt what I'm saying here, but you'll be very recognized by the end of this decade. You'll see exactly what I'm talking about. So America is basically over, which is sad. And so what's coming in its place is basically a confederation of countries, but we won't have a centralized government. You'll just have regions: the Southwest, the Northeast, the West, the Midwest. We'll have regions, and each region will be kind of unto itself. And so that's what's coming, and that's the reason why gold's going to go to the moon, because this basically this end of era situation we're in, and it's pretty obvious. I mean, if you're paying attention, how things are breaking down. And so, like I said, once the federal government cannot borrow what it needs, and I've always said this is the reason I own gold and silver. It's all about the bond market. The bond market is much more important than the stock market. Once the bond market cannot, the US government bond market, the federal treasury, once they cannot borrow what they need, that's it. That's game over. And that's what's coming. So step one is going to be fragility in the bond market. Fragility is when they basically have trouble borrowing what they need, but they'll be able to. They'll basically squeak by. But once the recession begins, the fragility in the bond market will begin, and then you'll get this doom loop, and then everybody will see the writing on the wall, and that's when it all ends. And so that's kind of it's the path forward. It's ugly. I'm not happy about it, but there's nothing that's going to prevent that outcome that I'm explaining.
It's really interesting. The point you made a second ago. We'll get Chris here in 1 second. The point you made a second ago, Don, that gold's done what it's done, and that's with the stock market doing well, and no credit problems, and blah blah blah. And God forbid, as you were saying earlier, the worm turns, and then just imagine what's going to happen. So it's a really interesting observation on your part, Chris. Good to see you. What's on your mind, friend?
Oh, not much. I'm fascinated here, and I love that you turned the gold bug upside down so we could see the Bitcoin falling out of his pockets. But no, this is fascinating. I appreciate all the knowledge here. It's great. I don't own any gold personally, or really metals at all. I'm like mostly in, maybe there's something in like one of my mutual funds, but I am actually thinking when I get a little bit more liquidity, I probably ought to add a little bit, like actually physical. Oh, that's a good question. Do you recommend physical, or do you recommend like Wall Street metal?
Yeah, I recommend that you start with physical, and I recommend doing silver, because so you get two to one leverage on silver, because silver is going to outperform gold by 2 to 1, at least 2 to 1. So I recommend everybody stacks 1,000 ounces of silver. So if silver goes to $100, that gives you 100,000. So if you got $100,000 piggy bank, that's really useful. And I always recommend that's kind of a starting point. And then after you do that, then you have to decide, do I have enough? And then gold, and then you want to own some gold too, but you don't really know how much you want to stack until you actually begin. It's like once you have a few bars of silver or a few coins of gold, and you actually have them in your possession, at that point you really you take on a kind of a new mentality around physical. It's like, so just buy a few, and then decide, okay, this is good stuff. Because once you have that in your hand, you realize it's real money. It's not going away. And so it's basically a nice piggy bank. So I actually think physical is the best place to begin. You're not going to make money on physical. What you're going to do, it's basically safety, because
Insurance deposit. It's basically an insurance policy.
it's insurance
Yep.
policies. It's basically a piggy bank that you need. It's total insurance, and I really think it's very it can be, it's something you're never going to touch, really. It's your piggy bank. But I think everybody should start there. Start physical. Do it every month. Just buy a bar or buy a coin every single month. Friends,
So then,
I'll be one final thing. So I actually plan. So once the HUI breaks out, once we get that silver candle and everything breaks out, at that point I'll stop. I'll literally stop buying miners. At that point, I'll probably start buying physical gold, because I'm not a cash guy. I don't like cash, so I'm not going to hoard cash. So what am
Right.
I going to buy? And I'm probably not going to buy any more crypto. I'm good on crypto. I'm good on miners. I'll probably start stacking gold.
yeah. So the question there, because I mean, I don't want to call this like a doomer kind of comment, but it falls in the bucket of doomerism, right? Saying that the country is going to break apart.
Yep.
And whether that's just like Cassandra or doomerism, like that's your perspective.
Right.
Is it not you, but like, an individual's perspective. So if that's the case, and the country does break apart, we become this regional thing, whether it's warring factions like a la crazy Handmaid's Tale kind of stuff, or or very peaceful or whatever. Wouldn't the better option then be Bitcoin because it's so like it's self custody like physical gold, but it's a lot more mobile and you could leave with it if you needed to. Like, do you? I guess the question I'm getting to here is, would you recommend somebody who has none of that, as we would say, like insurance policy, first buy Bitcoin and then do silver, or in a different direction?
Yeah, that's a tough decision. It really is. I would want to do both. Which one you do first? That's a tough one. But I do think that, we don't know how long Bitcoin's going to survive, how high it's going to go. But what I do think is going to happen, blockchain's not going anywhere. And I've been talking about this, so I'm really glad that this Genius X kind of passed. And now I make more sense. So now it's starting to become obvious that Trump has embraced stablecoins, and basically what I've been saying is that private money is not going away. It's with us, and so we are going to use these private money. Now the benefit of private money, and I think these regions will be creating. There's going to be we're going to be using private money. It's going to be part of our financial system. Now, the thing that's really useful with private money is it's outside the banking system. So if you have, 20 grand in your bank, and that's where all your money is, right? It's your savings. You got 20 grand. That's how you make all your payments. That's how you spend all your money. Well, there's a possibility that bank could close. And then you're waiting for the FDIC, and it might take a month before the FDIC, opens it back up, and your it's frozen. Let's say you only have your money in one bank, a regional bank, and it's closes, right? You might have to wait a month before you get your money back. But if you have this private money, you can spend it. And the key is it has to be fungible. But I think it's not going to be long now before you can spend private money at your grocery store. You can pay private money at Amazon. It's not going to be long now where these private tokens are acceptable. Now I don't know which ones are going to be. There's going to be lots of different ones, but I think it's inevitable because blockchain technology is so useful that we are going to be spending private money. I have no doubt that that's going to happen. And the fact that you can have some personal private money that you can actually hold, I think that's very beneficial. It's like another safety net for people. And I think people are going to use it. And I actually think, people think I'm nuts, but I actually think that you're going to get a discount for using private money at a grocery store. Like you go into Walmart and you pay out, they're basically going to say, okay, use a credit card, use this token and get 3% back or get 3% discount.
What?
I think that's going to happen. And the reason
Wow.
why is because when you use private money, it's peer-to-peer. So you're basically going to pay Walmart directly. It's not even going to go to their bank. It's going to go into Walmart's wallet. So if they're getting paid directly, then they're saving 3% on each transaction. So why wouldn't they give you 1% cash back? So I think that's going to happen. Like right now, you use a credit card at Walmart. Walmart pays the credit card company. So there's going to be that going on. One final thing on crypto. I think that crypto is very similar to gold in that they always told you, you don't need 10% in gold, 3%, 5%. You just need a little bit. And that's kind of how I look at crypto. I only have 6% of my cost basis in crypto. I'm 90% in gold and silver. But I use a little bit of crypto, and it's worked out really well for me. I use it as kind of just like I use gold. It's just like another hedge, if you will. I hedge my gold and silver mining through crypto because crypto has huge, upside. In other words, I think that one of them will do well. If they both do well, fantastic. But if my miners did poorly, I expect their crypto to do well, and that's kind of what's happened. And now they both might do well simultaneously. But I originally thought of it more of a kind of a very symbiotic trade. It's like they're both speculations. They both have huge alpha. I just thought they kind of go hand in glove. They kind of fit together, and I still feel that way. But right now, there isn't any crypto right now that I'm super excited about because we've had a bit of a run here. I don't see anything that's super cheap. But I don't see any 20 baggers right now that I could mention. I would have
All right.
a year ago.
So Don, for those who don't really know you, how can they find you on the internet? What's your website page? Where how can people find you? You're on X, but you also have a web page where you have your research.
Yeah, it's gold stock data. So that's for anybody that owns any mining stocks and want to add. So it's basically for existing investors. It's not really a stock picking site. It's more of a do your analysis site where I basically give you leads and expect you to do your own due diligence. So it's basically a lot of data, a lot of information, but it's super uber useful. Like if you own any mining stocks and you're thinking of adding, you want to be a member. Because you're gonna
Awesome.
find some really good
Awesome.
opportunities.
Awesome. Awesome. All right, so Don, this has been great. We're going for over an hour. Really, really appreciate this. I'm so happy we got to meet. I've learned a lot, and everyone should give you a follow and subscribe. So, and Dilly, thank you very much. This has been terrific. I didn't realize we were having a Bitcoiner as a speaker, but this has been great. So,
Everybody's going to
thanks
be a
everyone.
Bitcoiner eventually, George.
Here we go. Here we go, Dilly. There we go.
Wait.
All right.
I got one last thing. So
Yeah.
most she sounds yeah, she's like Uber likes Bitcoin. What about phase three? You heard my thesis on phase three that Bitcoin either is going to be utilized or it's going to die. So I mean, what
I
do
don't
you?
think Bitcoin is ever going to die. I think it will be used as I agree about like collateral
Okay.
and a store of value.
Hmm.
Um I don't see it ever dying.
Okay. So yeah, I agree with you. I think it will be used as collateral in a big way, but I think that's going to be the key to to this phase three. But one last question for you, and that is, I mean, do you think that the Saylor's thesis has any, any truth to it? I mean, any potential? His thesis is that the hodling thing, the source of value, is just going to just go forever. Like he thinks we're going to have 18% returns like for the next 10 straight years. I think that once we get a saturation point, there's no way in heck we're going to grow at 18% annually. What do you think about
But
that?
you see companies adopting it, and I mean it keeps evolving, and I don't know. You said you understand like the halving,
Mm,
and I with the amount of people, I think it's like 5% of the world uses Bitcoin currently.
Way
Like there's
less.
a
Way
lot of
less.
room.
right.
So I it can't be turned off, like you said. I think that's the most important aspect of Bitcoin
Well,
that a lot of people don't understand.
but once you get saturation where basically everybody's bought it that wants it, can it really grow at 18% a year? I have my
No,
doubts.
but that saturation is going to take a long time. That's not. I mean, I don't think that's longer.
Yeah, I think the
It's a long
saturation
time.
will take a lot longer.
Yeah,
Okay.
it's below. Like right now, I think it's like less than 2%. Maybe that like own anything, but like a meaningful amount, it's crazy
All
low.
right.
Like over a Bitcoin, it's like crazy low.
Well, I think saturation will hit about 500,000. You could be right. Maybe it goes 1 million before we hit saturation, but we'll see. You're going to need a lot of demand to keep it, to hold it up, if you will. I just think that at a certain point, basically most people are hodlers like me. We've never even touched our Bitcoin. We'd have no plans to. But at a certain point, we're basically going to start selling it, start using it, start spending it. That's what I mean by saturation. So that's why I don't believe in the Saylor thesis that 18% forever kind of thing. The $10 million Bitcoin thing. That's all based on a theory that the current drivers in Bitcoin that exist today are going to be in perpetuity. I don't buy that. I
Yeah, but we just saw like a huge sell in Bitcoin from like OG wallets, and I mean we're still hanging out
we're not
at
we're
what is
not
it,
yeah
117?
we're not even close to saturation yet. We're early innings. I mean, very few institutions even have it on their books yet. Very few insurance companies even own it. So yeah, saturation's early. That's what I tell people. Don't dismiss phase two. Phase two is going to push Bitcoin a lot higher. But I don't the Uber 1 to 10 million crowd. I don't think that's a slam dunk yet. We're but if Bitcoin becomes the number one collateral in the world, then Bitcoin could definitely go much
All
higher.
right. So all right. So I'm gonna allow Christopher one more comment, and then Dilly, it's enough. Okay, because
Yeah,
I'm
this is very quick. Just the wrinkle that you threw in, uh, Don, which the intersection. Oh shit! What was that? Oh, sorry. Okay, the intersection of your thesis of the U.S. breaking up into regions
Yeah,
and this phase three.
yeah.
What if it turns into an actual currency because there's no longer capital gains because there's no government to collect capital gains. That's a huge wrinkle. That could really change the game because now you could transact with
Well,
it
that's you,
in a way that
right?
nobody wants to transact if there's capital
Right.
gains. That's
That
insane. So the intersection of what you're talking about, if those two things happen,
right.
then that actually could be the
Well,
answer.
right. You're talking about utilization, and that's what I mean. If it's utilized, it'll just keep going up, up, up. Yeah, it's all about, but it has to transition into utilization, I believe.
Well, not even necessarily. Last thing I'll say, not even necessarily continuing to go up. It would just stabilize and not drop.
Yeah.
It could crash if you're not utilizing it. Like I could see your point on that, but if there's no longer capital gains, it's going to hit a saturation point and then stay at equilibrium.
Right.
Because there's no like supply and demand. I mean, maybe like 1 or 2% based on whatever population growth or decrease, but whatever that is, like anyway, it's just an interesting thought exercise. I'm done. Thanks, guys. This is cool.
Thanks.
All right, Dilly. We have come to the end. I have to be somewhere. Don, I want to thank you, Chris, Dilly. This has been great. We'll do it again, Don. Hopefully before the year's over. Best of luck, and everyone give Don a follow and check out his research. Good
All right.
night, everyone. Take care. Bye-bye. Bye.
Thanks,
Yeah.
Durrett.
Bye.
Night.
Thanks.
Bye.
Bye bye.